Bitcoin's hash rate is at an all-time high. The difficulty adjustment has gone up 6 consecutive times in a row. What is fueling this? Welcome back, everyone. Let's dive right into it. ETFs like BlackRock are responsible for BTC mining hash rate surge. And of course, put the word expert and boom, you know that this opinion is much more valid than anyone else's opinion. Wink, wink. The creator of the Bitcoin stock to flow model, known by the X username Plan B, shared insights into Bitcoin's surging mining hash rate, arguing the involvement of significant asset managers like BlackRock. According to Plan B, financial institutions seeking Bitcoin exchange-traded funds, such as BlackRock, are adopting a front-loading acquisition strategy. He claimed these institutional investors opt to accumulate BTC indirectly through miners instead of purchasing the crypto directly on exchanges. Plan B argued that acquiring Bitcoin directly on exchanges could significantly impact its price. On the other hand, he noted that buying it indirectly from miners affects the mining hash rate more than the price. According to Plan B, this could explain the recent Bitcoin network hash rate surge. Meanwhile, Dan Held, a former growth marketing director at the Kraken exchange, challenged Plan B's perspective about the price impact of BTC acquisition via miners compared to exchanges. Let's see who has the best hopium here. Held argued that all trades, whether over-the-counter or otherwise, inevitably impact the price. I don't disagree with that. Held emphasized that the total amount of bought or sold coins remains identical regardless of the trading counterparties involved. While acknowledging the validity of Held's view, Plan B introduced additional considerations. He suggests that the difference between ETFs buying OTC from miners and miners selling OTC to ETFs is that the former removes demand from the market while the latter removes supply. The mining difficulty surge follows the network hash rate rise as the average hash rate clocked at 504.8 exahashes per second compared to 486.50 exahashes recorded in the previous mining difficulty adjustment. Okay, so look, the reality is that these are interesting theories, right? I mean, Plan B could be right. These companies could be going somehow right to a type of broker for the miners, so to speak, right? Because they can't essentially go to the miners directly. At least that's what I understand. I mean, unless they know a miner. The other piece of it is this. It's no secret that in the last several months, if not at least a year, companies like BlackRock have been buying a lot of shares in miners. Okay, so again, a lot of times this is a perception game, and I'm not saying that a company like this is possibly not indirectly buying Bitcoin, but I just don't believe that it's not going to affect the Bitcoin fiat exchange rate. I just don't see that. So I did a little digging on Reddit, right? Our Bitcoin. Here we go. And there was an old post, which I think is actually fairly significant and could be helpful to us in this situation. So why can't we buy Bitcoins directly from miners? Why do we need middlemen and exchanges like Coinbase to buy Bitcoin? So here's a couple of the responses. You can buy from miners. Don't do it here on Reddit. Especially if someone asks you first. But you definitely find miners on P2P dexes to buy directly. Usually the price will be somewhat higher because people want coins without history. Now, I'm not saying that ETFs, I'm not saying that BlackRock really cares about having coins for their ETF without history, but I think that that's a very significant point here that some people don't understand, is that when you're not going, when the more illiquid an exchange is, the more variation there is between the bid and the ask. Okay, so essentially the more liquidity there is in a market, the closer the price points can line up, the lower the variation. And essentially, if you want to use a term like slippage, I guess you could say the less slippage there is in the price, right? Meaning that if you sell if you sell Bitcoin or you buy Bitcoin, it isn't going to cause a massive, like a massive spike in the price. But the thing is that regardless of the liquidity of markets, Bitcoin itself is a scarce digital asset. So it's, anyways, I just think that I don't know if I buy it that they're going directly to, peer-to-peer dexes or any of that. I don't really think so. I don't really think so. I mean, it's quite possible that they could be going to exchanges like Gemini and essentially trying to accumulate a massive, as much Bitcoin as they can directly from them. But again, I don't see how that wouldn't move the Bitcoin fiat exchange. I don't. Here's another take, which I highly doubt that BlackRock is doing, right? And of course, this post, right? This Reddit post has nothing to do with BlackRock. I'm just showing you historically what people have said to buy Bitcoin directly. So this person goes, a lot of miners sell on BISC. They won't tell you they're miners. That's an interesting one. And keep in mind, if you've ever used an exchange like BISC or HODL HODL, you'll notice that there is a premium for non-KYC Bitcoin. And I think that's kind of the other thing, right? Does BlackRock really give a shit about KYC or non-KYC Bitcoin? I don't think they care. Anyways, here's the final response from this thread. Miners would have to register a legal money exchange service in any country in which they offer coins. That process is very expensive and time consuming. One company reported spending $80K on legal fees and over a year just to buy and sell Bitcoin via ATMs in the US. So miners wouldn't want the extra layer of cost, management, and risk. Do I think that this spike in hash rate and difficulty adjustment, do I think that this is some type of a result from the companies like BlackRock getting ready for the ETFs and accumulating Bitcoin? I actually don't. I really don't. This is pretty much par for the course what we saw last cycle as we were going into the bull market. I remember at that time I was doing my previous show, and I was discussing this. We were essentially always trying to find the correlation between the fact that the hash rate was hitting new all-time highs and the fiat price was more or less just kind of trending flat, slightly bumping up, but never really moving in step with the hash rate. And our, at least my assertion was that the hash rate precedes the price, and or is a leading indicator of the price. And I was wrong, right, for the most part, because we waited months and months and months, and the hash rate just kept on going to new all-time highs, and the price didn't do anything. So, yeah, look, this stuff is good hopium, right? It makes you feel good inside to think like, all right, this is why we're seeing all of this. The reality is, what it is we're entering the bull market. We know that there's going to be a halving, just like there was 210,000 blocks ago, and the miners that previously possibly had their mining rigs turned off because it wasn't profitable for them have now turned them on because it has now become profitable for them in their region. It could possibly be that. One funny take that I'd like to think could be true is everybody with a bit axe is causing the hash rate to go parabolic. So shout out to you. Shout out to the bit axe folks, for the people who took the time to design that board, build it. Shout out to also Altair, right? Altair.io for making the what's it called? The easy non-do-it-yourself plug-and-play BitAxe home miner. I think that stuff is cool. No, they do not sponsor me. No, this is not a paid ad. I think it's a really cool product, and I am. You know what? Even if I don't mine any corn with it, I still find it super interesting to see how Bitcoin is mined and to see that, in fact, you are submitting shares, which I didn't know that before. I really didn't. But anyways, guys, what do you think? I mean, do you think that this BlackRock stuff is legit? Do you think that they're really indirectly / directly buying Bitcoin from the miners? Do they even really care about that? I don't. Anyways, let me know what you guys think. Put it in the comments. Guys, that's our clip for today. Like, subscribe. I'm going to catch you all tomorrow.